This lesson will use an example to illustrate whether an organization is a technology user or provider. This governs whether they should be purchasing a tech E&O insurance policy. So many organizations use technology, but that doesn't mean that they need a tech E&O insurance policy. So let's consider a retail store that sells their clothing online. They use the internet technology to sell their products to their customers. They use an organization to host and run their website online, also technology. They use a payment processing software system, technology, to process payments, and they use an electronic inventory management software, also technology, to sort and ship their products to their customers. But does this mean that they're a technology organization? No. They're a retail store that uses technology in their business. They don't create the technology. They're not a website designer who created the online store, and they're not the organization hosting and running their website. They didn't design the software to process their payments, and they didn't come up with the electronic inventory management system they use to get their products to their customers. They're a retail store who happens to use technology. So what about an organization that uses proprietary technology in their operations? Do they need a technology E&O policy? What if they develop the software internally, but they don't sell it to others? To answer this question, let's go over an example and use an organization called Geo Inc. Geo Inc. provides geologic engineering services, and their customers rely on them to advise where best to drill in the earth. Geo Inc. takes ground samples and then uses their proprietary software to analyze the data and deliver the results to their customers. As we review this example, it's important to keep in mind the key liability triggers within a technology E&O policy. The first is financial loss of a third party arising from the failure of an insured's products. And then we've got financial loss of a third party arising from the failure to render an insured's services. In the case of Geo Inc., an organization developing software internally for their own use, their customers would not be directly impacted by the technology product because the organization is not a technology organization and they're not selling a tech product or service to a third party. It's important to remember that since Geo Inc. is offering a service, they likely need a basic E&O policy. Are they inherently a technology organization? No, they use technology internally to deliver their engineering service. After all, technology is embedded in nearly everything nowadays, but that doesn't mean that everyone needs a tech E&O policy. Furthermore, many insurance companies offer tech E&O on the basis that the policy only provides coverage for the technology product or service. Adequate understanding and knowledge of a risk is key to buying the right insurance policy. This lesson illustrated the difference between an organization who uses technology in their business and an organization who uses proprietary technology to deliver a service to their customers, and why neither organization needs a tech E&O policy.